Interior design and renovation platform Livspace started in 2015 to provide a marketplace where vendors, suppliers, and homeowners converge. Its one-stop shop concept simplified the renovation supply chain, helping it grow to over 50 cities across the region.
India, Southeast Asia, and the Gulf, this put together would be close to a $45 to $50 billion market. And despite our scale, we are probably across the markets, maybe 1 to 1.5% of the market share.
It took 7 years for Livspace to hit unicorn status, which marks the company reaching $1 billion in valuation. And while that generally connotes success, Livspace says the title comes with a heavy load.
It's the responsibility that you're actually inheriting because many shareholders are actually investing in your vision and are trusting your ability to be able to deliver to those kind of milestones. They're actually really looking at you to build a long-term sustainable institution, right?
The home design startup has raised over $400 million of funding from investors, including the largest owner of furniture giant IKEA stores. After business struggled during the height of the pandemic, Livspace is now seeing a boom, and it expects to reach profitability this year.
I think investors fundamentally are looking for large markets with unsolved problems and great dreams, trying to build a long-term institution that generates, significant amount of free cash flows and is highly governed and sustainable and a very strong employer and a customer brand.
Globally, there are 1,200 private companies valued at $1 billion or more, and 52 of them are in Southeast Asia. Collectively, global unicorns are worth over $3.8 trillion. Last year, only 8 firms in the region were minted into the elite club, compared to 23 in the previous year. Singapore has the most unicorns at 25, while Indonesia has 16.
Even in Southeast Asia, there are about $60 billion of capital that went in, and it funded about 4,500 companies in the last 5 years. The reality is the natural selection, the Darwinian selection and survival of the fittest, that applies.
B Capital was started in 2015 by Facebook co-founder Eduardo Severin and other partners. B Capital currently has over $6 billion in assets under management across multiple funds that support seed to late-stage venture growth. Of the 140 companies in its portfolio across the US and Asia, 33 are unicorns.
These companies and founders are transforming large industries in areas like enterprise software, fintech, healthcare, and Asia in consumer-enabled tech. The early stage, you're really looking for a lot around the founders, product market fit, and that's kind of a big part that you're kind of spending some time evaluating. At the more later stage, you do go very deep into understanding unit economics, profitability, what is the path for the business to kind of scale, what is the moat in the business.
What makes many billion-dollar startups stand out is their ability to disrupt.
You need to provide true value to your customers. But the solution itself can't be 1x or 2x better than the old way. It has to be 10x better so that to entice customers to switch across. Right. Certainly, it's possible to spot a company at an early stage whether it has got the potential, but it's certainly hard to get it right.
For venture capital firm Tin Men Capital, the unicorn status is not the key yardstick. It prefers to focus on technology startups with good revenue traction in shipping, supply logistics, commodities, manufacturing, and construction in Southeast Asia.
We like B2B tech because they have high margins, meaning each customer that they acquire is actually positive in margins, and they are capital efficient, so they do not raise too much capital to scale, and they have lower failure rate. So by focusing on this segment, we do not have to rely on unicorns to return attractive returns to our investors.
I think this is a power law business where a few drive the success of a fund and the return, and that is true. So as companies scale up, some of them hit an air pocket and they have challenges. And so when you do find some of those gems and great companies, it is around backing your winners.
B Capital currently has its eye on generative AI, robotics, and cybersecurity as the next areas of investment. For now, Southeast Asia's $3 trillion economy is rife with opportunities, particularly in the digitalization and financial services.
Singapore could become a leading hub for fintech, not just in the region, but globally. Indonesia, on the other hand, you've got now 60 million small and medium merchants, and you can see how technology could shape that.
For Livspace, becoming a unicorn is just part of a long journey that's just getting started.
Great companies take 8 to 10 years before you can really see version 1 of the company. We've been around 7 years or so in terms of commercialization. So we actually really feel that we've just begun.